Hey there, good people. This video today is going to be an overview of my biggest plays. I'm going to be covering some important news stories. I'm going to give you guys a market overview. And by popular request, I'm going to cover Palantir. It's going to be time-stamped for everybody's convenience, but in my view, every single second of it's chock full of some pretty good stuff. This morning, the markets were gaining, going into critical inflation data, as well as the start of the Q2 earnings season later this week. On the heat map, we see that there has been some profit taking on the Magnificent Seven. They're all in the red, while the rest of the market's gone green. What an incredible flip there. Because of the Magnificent Sevens waiting on the S&P 500 index, that leaves the index mostly flat today, despite that impressive sea of green. The Dow is up 126 points at the making of this video, and again, because the QQQs are heavily weighted by the Magnificent Seven, it's slipped 31 points. Now that's given some life to the SQQQ trade. I have not yet been enticed to get into the SQs. Matter of fact, I'm still seeing the largest potential to the upside on the big boys like Apple, Amazon, and Tesla, and those are the ones I'm going to be focusing on today in addition to Palantir. I've given technicals on Palantir before, but I haven't really covered them in depth. Today, I'm just going to give you guys a short and concise technical review. Then I'm going to put it on my list of stocks I'm going to do a deep dive on in the days ahead. Today's the start of a new week. It's a beautiful day on Wall Street, and as I always say, we're here to kick open the golden door and make some money. This is the Stocks with Josh show. As always, thank you so much for the likes. Greetings to the new subscribers. And if you're OG Stocks with Josh, then say hi, throw a heart in the comment. I use the heart emoji for two reasons, because the world needs more love and less hate, and because in my view, it takes real courage and real heart to conquer Wall Street. Wall Street belongs to the people. BlackRock, JP Morgan, Fidelity, they'd be nothing without your 401k. So what I love about Talking Finance on YouTube is that it's a movement to regain our power over our own money, our lives, and our own wealth. It's my opinion that the education system in corporate America is designed to make you sheeple. But on this page, we're the wolves of Wall Street. We're not the sheeple. All right, so let's get into it. Last week ended pretty bad. The Dow, the S&P, and the NASDAQ were all in retreat. The market actually declined, though, because of the overall good economic data that had pushed the bond yields up. There was a news story this morning about the Fed raising the capital requirements of the banks that caused financial stocks to jump, but I personally was not impressed, and I was actually surprised that they jumped on that news. Now, they are oversold, but when he asked them to raise capital by 2%, I took that as him giving us the early sign that he is going to remain hawkish on these markets, and he is preparing them for a negative impact of the future raising of those rates. And that's going to hurt the banks. You got to remember that this increased interest rate environment has had an extremely bearish effect on these banks' bond portfolios, putting them underwater and in danger. I don't personally believe that the danger is over. That's why I'm not bullish on the banks right now, but I want us to take a quick small peek at the KRE Regional Banking ETF. This is the one that I'm watching the closest to see how financial markets are responding. You can see that recently it got rejected beneath the 20 MA and at the top of a descending channel. Now, I've identified in the past that $41.40 is a critical level for this ETF, and at the moment it is above that price, and so it is leaning bullish today. So if it closes, though, below 40, and here's the whole point of me bringing this up, that would be a great place to short this ETF. If it closes, though, above $42, I would expect a retest to the top of its current price range, which is around $44 to $45. I wanted you guys to have those technicals. I'm going to be keeping an eye on this particular ETF and sharing my thoughts with you guys. I'd love for you guys to let me know if you're playing KRE. What's your thoughts about the banks in general right now? I could be wrong. I may not be right about the banks, but my current personal interest in trading them or investing in them is extremely low. They're beat down, and so it wouldn't shock me if they went up, but let's just say this. If the banks rally and small caps rally, which we're seeing a little bit of that today, then this is going to be an insane bull run ahead. So if I'm underestimating the banks and they begin to push up and the small cap join the Magnificent Seven and then they all begin to go up, then this is going to be an incredible, insane bull rally that nobody is expecting. That's one of the reasons why I'm keeping a very, very close eye on what these banking stocks do. All right, so this week we've got important data that's going to impact the bullish sentiment going into earnings. On Wednesday, we've got the June Consumer Price Index. Most analysts are expecting a huge drop from 4% in May down to 3%. So that would absolutely be a market mover. If we get that result, all the fear of the Fed for the remainder of the year is speculated to go away, and the markets could be off to the races. Then we have Q2 earnings season starting this Friday, and all eyes are going to be on the fear of shrinking profit margins. And here's the big takeaway I wanted to remind you guys of today. No matter how bullish you are on your favorite stock, albeit AI or Tesla or whoever you're favoring right now, here's what you need to remember about the stock market. The number one thing that you need to understand is that stocks, they don't go up when companies make less money. It can't be any simpler than that basic idea. So if these guys do not come out with profits moving in the right direction, then we know for certain the market will not like it. Yeah, it doesn't matter if Tesla, Apple, or Amazon's going to take over the world. They have to take over the world and make more money from quarter to quarter. That's Wall Street 101. But I'm definitely going to be playing the earnings on all three of those coming up. Those are the ones that my eye is on. Those are the ones I'm taking my biggest position on. And the way that I keep an eye on earnings is through the moomoo investment app, which is my go-to earnings calendar of choice. In my view, the way that they've got earnings laid out is super easy. If you don't have the moomoo investment app and you live in the US and Australia, then you can check out their current offer to get up to 16 stocks plus a bonus gift of $100. If you put $100 in, they're going to 1x your cash by giving you a gift of $100 back, plus a chance at 5 stocks. Each one of those could potentially be valued between $3,000 and $2,000. It's a stock lottery. Click on the link in the top pinned comment and you'll get all the details. All right, I have to briefly talk about an AI story of interest before I get into my stock plays. I want you guys to check out this news release that we got today. All eyes are on AI as Congress heads back into session. Both chambers of Congress are taking a good look at AI and crypto as they head back into session. Schumer said AI was a central focus. He said to build on his safe innovation framework for artificial intelligence, he claims that this framework is an outline for how the Senate can advance American leadership. Now I'm going to spell this out for you. American leadership really means AKA spend money. American leadership in AI and harness means AKA control its potential, and protect AKA means maintain their power over society from AI's potential harm. You guys, if you watch this channel, you know that I trust my fellow American entrepreneurs way more than I trust the political ruling class. So I'm going to be keeping my eye on this so-called framework so I can better understand what's coming down the pipeline. In addition, they're going to be looking at crypto, which is another area of concern. They've got 2 bills on the table right now, one on stablecoins and the other one on the broader crypto market. They're poking their nose into crypto, and the takeaway is that we're going to get regulation and we're going to get oversight in the next 200 days, and it's part of what's going to trigger the next big bull season ahead. You guys have heard me say it before regarding crypto. It's one of the few places in investment where you can find life-changing money-making opportunity that doesn't come along every day. Regulation is going to be the loss of decentralization, but it could be the rocket blasters that get strapped onto Bitcoin and ETH by this coming March or April. I want you guys to check out my last video. I gave strong prediction on the miners as well as a little bit of an understanding of how the Bitcoin price action is going to move in the next 200 days. I think a lot of people get caught up in the bullish sentiment, not understanding the pattern, and so I want all of you guys to watch that video. I'll leave it at the end of this video. Like I said in that video, there's likely going to be a final pop coming. That's if Bitcoin can get above 31K. But then after that, the pattern from every other cycle before has been a minimum of a 200-day bleed off of that push. As the old saying goes, if you don't know, you better ask somebody. Okay, real quick thoughts on my Tesla, Apple, and Amazon plays. Tesla failed to get to my target resistance of $287 before turning lower, so perhaps I was a bit too bullish. We are now heading back to test support at $262.10. That's where I'm going to be buying again for the bounce. But if it breaks there, then the next major support, as I told you guys in the last video, was $245. So the risk is going up. If we get a bounce at $262, then my new target's going to be the $280 mark. That's exactly how I'm playing it. I have a tight stop loss at $261. And then if we get a bounce at my buy price, my take profit target's going to be slightly below $280 at around $279, maybe even $278. I'm going to give you guys a quick overview of my Apple play and my Amazon play, but I wanted to make a quick point about these plays. These things have been winning plays for a long time, and if they break down in the near future, you have to expect trade setups at this point not to work because we're trading the top of the range. It's worked a number of times before, but it may not work anymore. So if you've not been playing these plays and if you haven't been making money on the run-up, now's not the time to start trading them. I've made good money on these plays so far, and if I lose some money at this point, that would be expected, but I'm working with the house's money. And so my risk tolerance is likely to be higher than yours if you're now just getting into it. Okay, Apple stock. I'm in Apple stock right now this morning, but I'm not in Tesla until it hits the target price I gave you guys. I got into Apple this morning because it hit my target of $187. That was an expected touch of the 20 MA. My target is $200, but I could be enticed to sell early at an area of expected resistance at 193 bucks. There should be a battle at 193, but if we break above and close above 193, then $200 would be my next target. Amazon. Amazon's doing exactly what I expected. My target remains to be 140 bucks, but it has to, like I said before, squeeze above 131 where there's a ton of resistance. I mentioned that if the rally faded at 131, that we would backtest critical support, which at the time I told you guys would look like a fake out to the downside, hitting 125, 126 level, and then we would shoot up, go through 131, enabling the bears to get squeezed on the move to 140. That's still the gameplay for Amazon. I'm currently loading my Amazon position right now between 126 and 125. I've got a stop loss set on the shares that I own at 124 bucks. Okay, Palantir by very popular request. This is not going to be an in-depth coverage of Palantir, but I'm going to reduce it to the most important points that I think are needed today. Palantir was sitting at $7 just 2 months ago, and in 33 days, it jumped to the remarkable price of $17. That was a near 140% increase. Congratulations if you were in on Palantir. Let me know in the comments how much you made on it. Naturally, it's been cooling off ever since. It's been digesting that big move. Now, the last time that I covered Palantir, I said then in the video that if it closed above $9, that it would skyrocket. And that's exactly what the trigger price was. It jumped above 9, back-tested 9, and that was a perfect buy signal on that day, and it's been moving up ever since. But the big question is what's going to happen next? For that, we've got to look at the chart structure. We've got a descending wedge forming, which is bullish, but we've got to keep in mind that if we move to the bottom of the range, it could freak a lot of people out as it would come down in price quite a bit. If we break above the channel and above $17, then it's going to be back to the races again, and the next target for Palantir is going to be just under $20, anywhere around $19.30 to $19.60. The bottom of the channel could go to the $13 range. At that point, there's going to be panic selling, and then we could turn right around and jump higher. The reason that Palantir has jumped in value is because it received the golden AI touch. Palantir is not, though, a company building AI models, but they're a company that could benefit significantly from AI adoption. I think it's extremely important to differentiate between those two ideas. Palantir's next earnings are in August, right around the corner, and the stock is going to be one of the ones to watch for sure, because everyone's going to want to know if they can see that there's been some successful integration and profit making from AI. True AI stocks, as I've talked about on this page, have the potential to move from 300 to 1,000%. So even though Palantir is sitting up 120% from its lows, there could be plenty of gas in the tank to go higher. The pitfall, and it's extremely important that you hear this, could be the classic buy the rumor, sell the news going into earnings. If Palantir comes out with great earnings and surprises the market with beating expectations, in my view, the clear technical path forward would be to $20 and then eventually working its way up to $27. I'd love to hear from you guys if you're in Palantir, if you want me to continue to cover it, what you think exactly of my price targets. I'm also curious about your guys' average buy-in price. Did you guys come late to the party or did you get in under $9? Let me know all of that in the comments. My crypto alt video is coming up next. I needed to get my top trades out early today. Thanks for all the likes. Thanks for all the new subscribers that recently joined. If you want to get the next video, hit that red button. That's it for today. I wish you guys all great success in your finances. Peace and blessings. We'll see you in the chat.